Oh man, yesterday was an insane day with the crazy runs that we saw with both gold and silver prices after the inflation read that came out worse than expected, got 6.2 as opposed to the 5.9 that was expected, and inflation is creeping up. Now, here's the interesting thing. I want to actually make this video somewhat of a discussion of what we could possibly see coming maybe next year. And this is all just going to be somewhat of a idea that I have. I want to hear your opinion about it in the comments section. It's going to be a pretty interesting parallel that we've been seeing here and there, but I'm going to throw some data behind it that will make it somewhat plausible. So we're going to be talking about the parallel between what we saw happen in 1973 to 75 and what we are seeing currently right now with the economy and also how it can impact gold and silver prices. Now, before we get into that, please hit that subscribe button down below because this is going to be a good one, and I want to get your opinion on it. And uh, so definitely, continue engaging. Please hit that like button and let's get into it. So, as you can see here today, we saw a massive rise, huge range in gold and silver prices. Here you can see the massive range that we had intraday on gold and intraday on silver. We also saw a huge range as well. Had some mean reversion, but looks like we're pretty much back on track here with silver getting back up to hopefully the $25 level again. Now, I actually had a friend ask me this question in a group chat, and he said, you know, why with the inflation read and pretty much all of these assets going up, gold, silver, even saw Bitcoin go up. Why is it that we're seeing the 10-year pretty much be very muted? And why has it actually been kind of retreating for some time? And that actually made me kind of think. So here we have the US 10-year currently right now at 1.46. And as you're looking at this on the screen, and I actually made a tweet about, or not a tweet, but a post about this, but pretty much since October 20th, we've been seeing it retreat. And interestingly enough, when you think about the US 10-year yield, you think, well, it encapsulates real rates and it adds on inflation expectations. So you would think that with the stronger than expected inflation, we should be seeing a rapidly rising US 10-year yield. So why is it not rising aggressively? Why is it still kind of flat? And here we can even see the same thing somewhat appear within the 10 minus 2 year yield curve, which is even more telling. Remember, when the 10 minus 2 actually rises, basically lets you know we're on the path to a recovery and inflation, will be behind it. We're actually seeing the 10 minus 2 retreating along with the 10-year as a standalone. So when you see the 10-year dropping, especially if it gets too far low, you start thinking, oh man, things actually might look somewhat bearish in the future. So with that being said, I'm actually leaning towards the side of thinking that maybe with the what the 10-year is actually sniffing out and what the 10 minus 2 is sniffing out is that yes, inflation is here, but perhaps what is causing this muted response in both assets is that both of them, the real rates are actually dropping aggressively in anticipation of some bearishness in the overall economy moving forward, similar to what happened, interestingly enough, in the 70s. Now, take a look at this. So, and also here is the real yield. We're at negative 1.17, dropping down pretty aggressively. Now, take a look at this. Here we have 1973, and we have inflation. Notice that pretty much it was rising all throughout that year, starting at 3.65, going all the way up to 8.71, basically rising almost a month after month. And then even in 1974, again, rising pretty much month after month, going all the way up to 12.34. So we see massive gains in inflation in 1973 and going into 1974. What's interesting is that in August, August of 1973, we saw a inflection point, and it actually dropped aggressively going into October. The 10-year yield, and again, the 10-year yield, you're expecting, well, hey, if inflation is rising this much, especially going into 1974, if inflation was rising that much, why was the 10-year yield dropping so aggressively during this time? And again, as you can see in this gray area, anytime you see these gray areas on these economic charts, that means that there's a recession there. So this is when the recession hit. Right before the recession, we saw the 10-year drop aggressively, even though inflation was rising aggressively. So, what am I insinuating here? I'm not necessarily insinuating that what we could expect is a recession, but what I am saying is that we are maybe seeing weakness develop here in the global economy, in addition with having inflation rise. Now, again, this isn't something that is uncommon. As you can see here from this quick blurb on CNBC, with the oil embargo recession from November 1973 to March 1975, this quick blurb here, it says, OPEC put an embargo on oil imports from multiple countries, including the US, over their support of Israel's military. Oil prices roughly quadrupled as a result, putting a major crunch on the economy as gas prices soared for consumers, reducing their spending on other items. So output dropped because of that. The economy was further hurt by President Richard Nixon's attempts to reduce inflation with price and wage freezes, while a 1973 global stock market crash resulted in a nearly 2-year bear market that saw the Dow Jones lose 45% of its value. Now, here's the more important part. The resulting recession lasted for 16 months and saw GDP decline by 3.4%. And GDP was actually rising to a decent level in 72, and then things just start to slowly kind of fall off a cliff by 74. So output was actually dropping in GDP while inflation was actually rising. So oil isn't really the issue now, this oil embargo in 1973. What's the oil of 2021? Well, you could say maybe it's semiconductors, maybe it's, the aggregate of all these supply chain issues. It could be a whole variety of things. But all we know right now is that that's not going to get fixed anytime soon, and prices are rising. And it looks like the global output is starting to really, uh, you know, feel the pain of that. So, what exactly am I saying here? Am I saying that is this going to reflect itself in gold and silver prices as it did in the mid 70s? Well, that is where you guys come in. I want to know what you think. Do you think that we will have gold and silver prices rise aggressively, similar to the way that we saw in the 70s, um, on the back of a weaker global economy, weaker US economy, and rising US inflation? Let me know what you think about that in the comments section below.